Hi, this is Mark with your analysis for the week commencing the 30th of June. Before we go into it this week, let's have a quick review about what happened last week. And it said on the previous Sunday that I was a little concerned about placing forward orders because after lots of big moves like this you often get pullbacks, and I felt it would be easier to trade intraday. For example, on the pound I was looking for a pullback all the way up here, and the reason being that this lot was in the way. Having said that, had you traded off a daily, look, 53.30 I had as major previous support and resistance. Wednesday closed below, Thursday pulled back, and then you have your 150 odd pip move. So it was possible to trade off the daily, but I've been showing in recent weeks a very simple method of trading channels. And this was the British pound, and I explained last week when we were back up here that the ideal scenario was a pullback to this upper trend line. However, we didn't quite get the move, so on Wednesday in my update I said to you, look for a break and close below 5400, and the reason being that for 2 whole days price went absolutely nowhere on this pair, spinning tops, indecision cancels all the way. Finally price breaks through, it pulls back, which is what we look for every time, and suddenly you had a 200 pip move from a simple strategy based on price action without hardly any indicators. Similarly, the Euro USD. Now we were looking for pullbacks, and initially this trend line was further over here, but then we'd moved over here. Finally, after the indecision, and again on Wednesday I showed you that if we got a break and a close below here, now I took the pound. You don't take the pound and the euro at the same time because in effect it's the same trade. But what did it do? It broke and closed below the 3100. It then fell. Where was price ever likely to stop? If it crashed, it was likely to bounce off 130. Now it is a counter trend trade, but this is a 4-hour. It failed to break and close below. A spinning top, you could have taken this as it drifted back up. If you wanted to go with the trend, conservative entry again was 100 pips back down again. These were all simple, predictable trades that I'd shown you last Sunday and in Wednesday's update. Similarly, the dollar Swissy, last weekend I said to you, this was the previous Friday's close, look for a potential short at 93.60, and I said look for candlestick clues. And what do we have on the 4-hour chart? You had 2, 3, 4 candles, indecision candles, reversal candles, all at this major area. This move went 50 odd pips, and as you know by now, particularly in choppy markets, I move my stop to entry after 25 pips. I take half the profit off if I'm not sure about the move, and then leave the balance to run. What happened if you only traded the Swissy last week? Eventually price came back up. It closed above this all-important line that it held the week before, and which is the weekly 55 EMA. It closed above, pull back, you go long. This was the euro yen. Now, I'd shown you 128 was key and crucial on this, and I explained why I didn't like it, because we'd had all these nasty spikes, and it happened yet again last week. This is a move up for 100 odd, and I move back down, and eventually what will happen is you'll get taken out your stop, and then it will promptly go the way that you guesstimated. That was why I was avoiding that one. Dollar yen, I'd said look for a potential short at 98.60, and just after the open last week, what did it do? It came up, it touched it to the pip, the old fingers in the fire trade, burning the fingers, and price promptly moved back down 150 odd pips. Now later on in the week, this was Friday, so I don't trade Fridays, you could have taken this as a break of the major area. You're then looking for a break above, a pullback with a view to a long. So it was tradable. Euro pound, I mentioned it was messy. I showed you how the safest way to play this was to wait for a break and close below the trend line and the 61.8 fib. Had you been patient and disciplined, you would have avoided a loss here. I also said if it shot back up to 8600, then consider a counter trend short. And the final option on the euro pound, I showed you, if you were going to go and be more aggressive, go down to a 4-hour chart, look for a break and close below 8500 for the pullback, and I said get your stops to entry after 10 or 15 pips, because it may well only go as far as 61.8. It all looks spookily accurate now. I did show you this in advance, but the reason why it is a predictable area, it's happened so many times before, And if at the end of the day, there's human beings that are trading the markets and computers, and they're all looking for where price has reacted in the past. On to this week's analysis. This is NFP news the week ahead, and this is likely to be probably the most difficult week of the year so far to trade. My plan, as ever, will be to try to make a profit before the Tuesday close, certainly by lunchtime on Wednesday, because as the week progresses, we get more and more news. On Tuesday, you've got the Aussie dollar RBA statement. The Aussie dollar has been in free fall, and therefore if they come up with something surprising, that could be the catalyst to shoot the Aussie dollar back up again, so watch that carefully. Wednesday you then have ADP non-farm employment. Prior to that you've got British Service PMI. You've also got more Aussie dollar news, so that's important. Then CAD, so we're building, getting more and more intense as the week progresses. We then, on Thursday, it's July the 4th, American Independence Day. A great deal of traders will be missing, and they will also be missing on the Friday because they'll make a long weekend of it. We have as well on that day GBP asset purchase facilities and the official bank rate and the statement, and then we have the dear old ECB bid rate and press conference. And you saw last month and in previous months how much the market can move particularly during the ECB press conference. So I certainly would not want to be in any euro related trades around that time. Friday finally, it's the dreaded NFP day, loads of news. It's Forex at its silliest. I never trade this particular day, and I say it's likely to be more volatile this time than ever due to the fact that there'll be so many US traders missing from the markets. Let's have a look at some charts. This then is the USD on a monthly. We're waiting for the candle to close, but at this moment in time this looks like a very bearish candle. We're coming back down to this trend line that's been in place since last year, and that's around 12900. There's loads of potential options on this pair, but what I'm going to show you is a few of the more conservative ones. Here on the weekly, we could be back on for this head and shoulders pattern that we looked at months ago. Head, shoulder, shoulder, neckline. For that we need a clear break and close below 12800 and a pullback with a view to a further move down. And if that move sets off, it could be measuring from the head to the neckline. It could be an 800 pip move, which spookily will take us down to 120, the whole number, which was also where price went to last July. So it could be history repeats itself once again. That will be the major move if you're trading off a weekly. The other thing to bear in mind off a weekly is we've just broken the weekly 55 EMA. So you could be interested in the pullback to 3060 area for a potential short. I would only be interested to short on this from longer time frames. 5-8 cross forming, stochastics rolling down. It does look very bearish on longer time frames. Same pair on a daily, and this was that 130-100 it pulled back to last week. This is that weekly 55. The safest, most conservative entry on this is look for a break and close below 130, followed by a pullback with a view to a short, and your target here would be hoping it would go all the way to 12800. And even if you want to take a risk on this one, leave part of the trade running, because if that head and shoulders starts to fire, you could well find you have an awesome July and collect that 800 odd pip move. And believe me, if all you are doing in trades is moving stops every day, it is the best way to trade. So conservative entry 130, pullback and short. You could look for a pullback to here. The problem with this, it's a very small area, and I don't like the risk reward ratio on this one. Going back down to the 4-hour chart, trade this from a 4-hour. Watch 130-100 again, and what you will be doing is you would look for candlesticks. If price drifts back up here, races back up here, and then starts to stall once more, and indecision candles, you'd look for a break back down. And I've just shown you the more conservative entry here is a break and close below 130, followed by that pullback. This is the dollar Swissy. It's very messy at the moment, and I really don't like this. Notice the Bollinger Bands are closing up, never in a million years banned at the moment. Watch and see what happens at the market open. I would prefer a short at 9600 on this pair, or a clear break and close below 93.60. And to be honest, in view of the choppiness the last few days, I would be inclined to watch this more on a daily than anything else. I would not be interested to long at the moment on this pair. British pound on a weekly, and where did price stop? It's a line I've had in place for a week or two, and it came down and stopped to the pip. Fingers in the fire, bounced back up again. Again, it looks bearish. 5-8 cross forming, stochastics rolling over. It failed to break any higher after the previous week and moved back down at this monthly 55 EMA, going down to a daily. You've had the break of the 153.30. We've already had a pullback to there, but if it pulls back to there again, I would be interested to short. 4 hour, go back down to this, and what you would be looking at, you're looking for a pullback, and a pullback anywhere to this upper trend line. Ideally, a pullback to 154.00 because you've the daily 55, the 4 hour crossing over as well. So anywhere in this area for a pullback, I would be interested. Particularly watch along the trend line, and remember, with trend lines, as the week progresses, price will move down, as will your entry. Final option on this one, if you're going to take a counter trend bounce, if it's going to stop anywhere, 150, which is down below this monthly 200 EMA, 150 is huge on this pair, and just like the euro bounce back at 130 last week, I would expect the pound to do the same in that area. Euro yen. Messy, it does look as though it's turning back up again, and we've broken and cleared this 128.00, but as I said to you earlier, it's these spikes that I really don't like. The problem here is you get in, you get taken out, but look for a pullback. Technically, you're looking for a pullback to 128.00 with a view to a move up, and from a counter trend perspective, I would be interested around 131.00 for a move back down again. Dollar yen, we also have this never in a million years Bollinger Band. We are drifting back up towards 100, major cycle level once again, and previous support and resistance as you can see across here. I do expect the dollar yen to race back up past 100 at some point this year. Could this be the start of it? Well, if it is, you're looking for a pullback, and anywhere around 98.00 I would be interested to long this pair, but I am less confident on the yens than some of my other pairs. Equally, the Aussie dollar yen, it basically drifted last week. It started to drift back up again. We've got this trend line down here. I'm going to leave this alone, guys. If I don't feel comfortable with a pair, I just find the easiest thing is just walk away for now. Euro pound, we've been bouncing around in this range now for weeks. Therefore, consider shorts at 86.00, 85.90, and consider longs back up anywhere around 84.70, this trend line. If it clearly breaks and closes below 84.70, then I would be interested to short. I would not do that on anything less than a 4 hour, and the more conservative entry will be a daily like this. If this candle spikes and then it fails to break through, you leave it alone. But if it clearly breaks and closes below here, then you look for a pullback with a view to a short. The short-term target would be 84.00. Do not be in any euro-related trades on Thursday morning until well after the ECB press conference. Aussie dollar continues to drop like a stone. It now depends on the Australian government as much as anything else. Do they want to see their currency stronger or weaker? Certainly better for their exports to have a weak currency, but this drop has been severe. It was prompted by discussions last month to do with the interest rates. They've just had a change of Prime Minister as well. A lot going on in Australia. 90 would be an obvious area of interest for a potential bounce back up, but you really are in a falling knife scenario here. This move has been so severe. If you're trading intraday, I will be interested to short around 94.00. Move this fib down to the next level. 94.00, you've got the 50% fib in the area. It is a previous area of support and resistance, and therefore that's the more conservative one for me. We have got MACD divergence on here. As price was clearly falling in this area, MACD is suggesting a move back up, and as I say, I will be interested to long at 90, but it's very risky and I would halve my usual stake. Final one, the CAD. This is a monthly chart, and you will see the last time the CAD broke this 55 EMA was back in 2009, and it was the July time again. So Prior to that, we had an area where it broke. It then went all the way back to 2002, and you can see in 2002 how effective that 55 EMA was, and back in 1999. So this 55 EMA has been important for a long time. This is a monthly candle, and if price closes where it is now, traders all over the world will be watching this, and I will be interested to long this pair. And I said to you last week, I can remember when the CAD was back up around 130. So there is room. If the dollar's going to go on a silly run, there is certainly lots of potential. So where do you catch the move? Well, you're trading this on the monthly, you would be looking for a pullback all the way down to around 10400 area with a view to a move up. And that was the area I showed you last week, where 10400 I was hoping for a pullback. It did drift back down and teasingly got within 20 odd pips of the entry before moving away. But that would be my preferred entry on this pair for all the reasons I've just shown you, and that beast of a monthly 55 EMA just below. Also watch around 150, but it's a bit close at the moment, guys. This was indecision last week. There is a lot of big CAD news, and we've also of course got that NFP news, but I would much rather price pulls down here with a view to a long. Okay, as I said to you at the beginning of the video, it's for me the priority is to try to earn the pips on Monday and Tuesday and early Wednesday if possible. I do not want to be in the markets when the ECB meet, and I certainly do not want to be around for NFP Friday. Happy 4th of July to US members. Enjoy the extended holiday if you are having the time off next weekend, and I will update you during the week. Tomorrow we have Basilis will be presenting his STT analysis. Later in the week we also have Fotis, and Fotis is going to be a regular contributor going forwards. Have a good week.